Step into the fascinating realm of industrial metals, where steel prices fluctuate and market indicators are the pulse of an ever-evolving industry. Welcome to Cup of Joe, the metal podcast paying homage to our founder, Joseph T. Ryerson. Settle in, savor a cup of Joe, and let the conversation begin.
All right. Hello, everybody. Welcome to another special edition of Cup of Joe. Seems like we've been doing a lot of these lately. Nick Webb, our Director of Risk Management, Commodities Hedging, as always. Nick, how are you doing?
Doing very well. Not as well as your background. That's a new one for you, isn't it?
It's the when I'm home, I tend to tilt it this way to kind of compete with your studio background you have. But it's the family room.
Yeah, speaking of which, got a different background for myself. I'm actually on the road at a sales meeting down in Nashville, Tennessee today. So you can see my lovely newly made beds in the background.
Yeah. Did you make them, or housekeeping came already?
I actually made them myself.
You make your own beds on the road? Wow.
Oh, when I'm recording Cup of Joe for the fans, I do.
You want to see the debauchery that happened last night.
He probably watched a YouTube video this morning to see how to make a bed.
Well, that chimed in. Jeff, notice you'll recognize from our episode we had just a few weeks ago. February 6th, we put together an episode with three of our supply chain directors. Had Eddie Lehner give a nice intro. We thought, here it is. We're ahead of the curve. We're getting in front of the news. And then, Super Bowl Sunday, got word that decision to implement 25% tariffs on all steel and aluminum imports. And that's created a lot of consequences across the supply chain, pricing uncertainty, all that. So we thought, hey, let's get the band back together and talk about what this means. So alongside Jeff and Nick, Mark Rose back with us as well. We got a new player here. Recognize him from previous Cup of Joes, Jeff Penz. Jeff is our Director of International Procurement and Recyclables, because I'm sure we're going to talk on imports. So Jeff, welcome to the group.
Thanks. Appreciate you having me.
So Nick, I don't know. We definitely want to kick this one off with our safe harbor provision. These are the opinions of Nick Webb, Mike Carrazzo, Jeff Notice, Mark Rose, Jeff Penz, and not the opinions of Ryerson. Do your own research.
Right. That's right.
I off the top of my head, I couldn't remember it, but
I think you did quite well.
Make your own bed.
Yeah, it's crazy, Mike. I feel like more and more often we're airing our Cup of Joe, and then within hours or days, something crazy market impacting is occurring. It seems to be happening more and more, and with more and more frequency. But maybe that's the world we're living in right now with the new administration. It seems to come, fast and furious at us, particularly on the metals front.
Yeah, a lot of questions, right, from customers, and I think it's a good forum to get some answers, hopefully. So we'll dive into some questions here. What we thought is the format is, maybe let's get the update on the aluminum, the steel side. Bring in Jeff for some of the imports, and then we'll just have at it with some open questions. So Nick, if you want to kick it off.
This will be a lot less slide heavy, just because there's a lot of open conversation and possibilities that could happen. Because while there has been a lot that's changed and the markets have already moved, we don't know a lot of the facts yet. And I'll get into what I mean by that. But if we rewind back to the last Cup of Joe, I put trade war in quotes, because at that time I didn't view it as a trade war. It was more of a border security tariff mechanism, because at that time it was essentially, we've got a fentanyl issue, we have an immigration issue, at least in the eyes of the administration, and that was the purpose for the 25% tariffs on Canada and 25% tariffs on Mexico, and then 10% tariffs on China. So that was kind of where we left off on Cup of Joe. As you mentioned, you fast forward to Super Bowl Sunday, literally, I think in the third quarter, Trump, while he was still on the tarmac, I believe he signed into place or announced additional tariffs on Canada and Mexico. And what I'd say there is, it was more of just an amendment to Section 232 rather than a whole new set of tariffs. So what that's ultimately doing is taking away at least for now, verbally taking away any exclusions that would then take these tariff impacts on Canadian and Mexican steel and aluminum up to 25%. The reason why that's such a mouthful is because there's a lot of nuance to it. At this point in time, the only thing we really know is the Chinese tariffs of 10% are in effect, and China has put in place a small level of retaliatory tariffs on the United States. Of everything that we've just said, that's the only thing that we really know that's in place. Everything else is conjecture and just kind of like risk management probabilities and trying to manage around that. But with that said, we certainly have seen some movement within metals markets. So I guess at this point, I'd probably like to just kick it over. Maybe we'll start with Jeff Notice on the aluminum side.
Sure.
Talk about some of the things he's seen from the supply side, from a pricing standpoint, and get into what's going on there.
Yeah, I think that's a good segue into it. I mean, on the aluminum side, the biggest area that we're watching, and we touched on the last cup of Joe, is the Midwest premiums. From our last cup of Joe to today, we've seen Midwest premiums jump by 10 cents, a little over 10 cents a pound, just in anticipation that we could see a tariff, and in particular, a tariff that would impact Canada, as we touched on that, as well as a lot of the pure aluminum comes out of Canada. On the LME side, that's actually stayed relatively stable. I looked at the numbers this morning. We're still running right around 2,600 a ton. Kind of ranging in that 118 to 120 range. One of the other areas that I'm looking at, though, is the hardener elements. Not only is aluminum or potentially aluminum impacted by the tariffs, but the hardener elements could get impacted by a tariff as well. So in the case of aluminum, magnesium is a big play, bigger hardener element that we work with, in particular with one of the primary alloys, 5052. Currently, it doesn't look like a surcharge would come into play if a 25% tariff is applied to magnesium, but we're tracking it. Right now, it's running in the 225 to 275 range. I think the baseline from at least one of our major mills that we work with domestically, their baseline is $6. So we'd have to hit over that $6 mark for a surcharge to kick in. But if memory serves the group, back in 2022, when we did have a surcharge come into play, that surcharge ranged from 10 cents to 16 cents on 5052 product. When you look at where Midwest ingot values are current state, and with all of the noise that's going on with premiums, the indexes actually too will look to be jumping around 15 cents month over month. So both in the 15-day and in the 30-day index, if we stay at the current level of a spot in 159, we're going to see close to a 15-cent increase month over month in where our index prices are at. From a mill perspective, we've also seen some of the domestic mills come out with price increase announcements on the conversion side. Those range anywhere from 15 cents to 20 cents and are in effect immediately. So any orders based on when their announcement came out, those 15 to 20 cent increases will apply. From an import standpoint, just a lot of preparation in the event we do see the tariff go from 10% on the 232 up to 25%. And I'm sure Jeff's got a few additional comments as it relates to imports. So maybe now's a good time, Jeff, if you want to throw in some comments related to imports.
Sure. I mean, I think Nick said it well at the beginning there. We're just talking about this because there's so much happening, and we're trying to figure it out, quite honestly. So if we back it up a little bit and we go just even a little bit further back, September 27th, they actually redid Section 301, which is something that people have kind of forgotten about, but that put 25% on steel and aluminum from China. A lot of that was at zero prior to that. So fast forward to February the 4th, and we have this additional 10% on China. So that takes you up to 35. And then with the 232, you put another on there, you're up to 60. Then you've got AD and CVD on top of that. So on some products, that's in excess of 100% plus another 60. So in other words, there isn't very much left that could possibly come in from China at this point. But impact of that February 4th, the one that Nick and Jeff were talking about with respect to fentanyl and the border security, it's yet to be seen if that has been appeased at this point. I mean, it may very well just go away. But on the heels of that, you have the 232 announcement that put 25% on steel and aluminum from everyone around the world. Going back to February 4th, you have 10% on Canadian energy, which aluminum may fall into energy depending on which article that you read. And then fast forward a month from now or 2 months from now, you've got April 1st with reciprocal duties and tariffs that may be put in place on countries that have them in place for the United States. So you talk about a moving target. This is this is as fluid as this could possibly be right now. And mills are trying to figure this out. We were on a call with a European mill this morning, and their take was rather unique, I thought. Maybe it's optimistic, was, hey, if all of the 232 goes away and we're all on a level playing field and all of these increases take place, we'll just be able to ship whatever we want into the US with no restrictions. And I thought, well, that's pretty optimistic. I'm not sure that's the goal of all of this that's happening, but it was an interesting take on it.
Yeah, Jeff, you bring up a lot of good points there where there is just so much, it's not optionality exactly, it's just different variations of how this could play out. And there are even some that are speculating that the border security related tariffs could be stacked on top of the 232 tariffs. I mean, if those sorts of things happen, and again, I'm not warning the audience to say that they are going to happen, we're just trying to air all possibilities. If you end up getting 25 and 25 stacked on one another on Canadian aluminum, for example, I mean, then you're not talking about 40-cent premiums. You're probably talking 60, 70%, 70 cent per pound premiums. So a lot is on the table. But at the same time, I want to make sure audiences are also aware these things could also get rescinded very, very quickly. And the risks go in both directions. And at least, my personal instinct or my personal feel is that I think other nations want to take measures to get these things managed down and take the steps to do that. So I think that risk is also real to the downside, but it's a very quick moving administration. It's very knee jerky, and the markets are reacting as such.
That's an interesting, you said 25 on top of 25. So like and I had this conversation with you offline, Nick, is like, okay, you had these tariffs with the understanding of increased border control, this and that, you have a month, right? And then all of a sudden the steel and aluminum came out. So it could actually be a 25 on top of it could be 50% on aluminum.
Yeah, I mean, you could theoretically be looking at something that looks like, an LME ingot price of $1.20. You put 25 and 25 on the premiums. That takes you all the way to probably, $1.70, $1.75 on the Midwest transaction, right. Which right now that's more like a 150, let's call it, maybe 155, somewhere in there. But yeah, these things are they would have real meaningful impacts on the aluminum market. And as Jeff mentioned, Jeff noticed, there's also this additional impact of inflation coming from the conversion as well, and rightfully so. I think the domestic mills are seeing this as an opportunity to say, if supply chains are going to shift more domestic, we probably should charge a little bit more for that. And I think they are doing so. I think, I don't know if you mentioned depot inventory specifically, but it sounds like the market in general is just reacting.
That's right.
Yeah,
that's right. Yeah. I mean, it's just to touch on a couple of your comments there, but I mean, we're on the spot. I think we're at 38 right now. So you start throwing out numbers where you're in that 60 to 70. I mean, those are staggeringly large increases from what we started the year at, where we're in call it the low 20 range. And if we don't get tariffs, we could see those numbers go back down into those low 20 ranges. So I think you or Jeff had mentioned it's a very fluid, very uncertain situation as it relates to where Midwest premiums are at. And then you touched on the depot side of it. Certainly seeing with this uncertainty and kind of panic that's going on out there, we're seeing kind of a rate on where some of the depot inventories across aluminum sheet and coil, across plate products, across soft alloy extrusions, across all products, depot is getting pulled in from not only ourselves but other service centers as well, as we try to combat what we're seeing going on in the current market. In addition, not only are we seeing a kind of a raid on some of the depot inventories that are out there, some of the depot broker inventories from a pricing standpoint, extremely volatile. We're seeing prices range or change almost on a daily basis, sometimes twice in a day. Maybe we got one number in the morning, we're getting a different number in the afternoon. So trying to track that as well has been a bit of a challenge.
Jeff,
I was
for the
oh, sorry, go ahead.
sorry, real quick, for the uninformed, i.e. me, you talk about LME and then broker inventories. What does that mean to the aluminum buyer, right? Are they typically buying off of LME depots? Is it like broker depots? Like, can you maybe
Yeah, it's mainly going to be broker depots, and that number is going to be a net number, and it could vary from day to day. Like I said, it might vary just based on volatility that the broker's seeing in the market. It might be that they're seeing a significant amount of pulls from their depot, and they'll fluctuate what that number looks like. And it might be the LME or the Midwest premium numbers that they're tracking and flexing on those up and down within that given day. So it's not just one factor that's coming into play there. There's a multitude of factors between LME, Midwest premium, demand that are dictating what we're seeing with where depot prices are at.
Okay.
Yeah, and if we actually go back to that LME comment earlier that Nick had, if you have a 50% tariff on $1.20, there's 60 cents a pound there, but that tariff also applies to the conversion of the material coming in as well. The only thing the tariff and duty doesn't apply to is the ocean rate coming into the country. So it's basically a technical term. It's FOB stowed value of the goods, which is the value of the goods when they leave the country they're coming in from. That's what's tariffed. So that could be a big number.
Interesting.
Oh, for sure. So Jeff Penz, while we're on that topic, and you got a little bit technical on us there, I do think it's worth noting that, and correct me if I'm wrong, as far as we know thus far, these tariffs as they're being written up for now, they've been alleged to be on not just the commodity portion, but also on, and not even just on finished aluminum, but also on aluminum products, steel products. It has been the terminology I've heard used. Correct me if I'm wrong, we don't yet have official tariff codes as part of this ruling, correct?
Correct, which makes it all the more for the speculation, because until you have a list of tariff codes, and for anyone who's not familiar, tariff codes, they're an international set of codes that all countries have agreed on the first 6 digits, and that helps countries identify what's coming in. So until the government actually comes out and says tariff number 8 to 10 digits is subject to, it's very hard to know exactly what this is going to apply to.
So
and customs can't.
it could be as much as 25% on all steel and aluminum fabricated goods, potentially.
Right.
Yeah.
Right.
Or it might not be. And that's where we just want to make sure we're laying out all of the possibilities for everyone here.
Hey, on the topic of imports, and I'm going to tee one up for you, Jeff, but with these dates that are out there with where a tariff could be applied, are you seeing delays in material as everyone is jamming material into the port to try to get it through prior to a tariff being applied, or has that not happened yet?
You know what? I would say it is definitely happening as people are trying to get things on vessels to get in ahead of it. Absolutely happening. The only sort of saving grace I'll say that there has been, it was very weak heading into this. I think a lot of people from an import perspective saw Trump coming into office as, I don't want to have too much on the books here or be committed too far out. I don't want to go long because we know he's probably going to do something. We're not sure what, but import was fairly light for the last little while. I mean, especially if you look at the carbon side of things, the domestic numbers were better than the import numbers for the last little while. So it's not like anyone really went and said, hey, I want to take a position on this because I'm going to bet against it. So I think that side of it has tempered a little bit of the rush that we've seen to try and get things in under the wire.
Just harken back to the COVID days, right? When everything was at the port and you couldn't get folks to unload it and pick it up and all that. Yeah. So you bring up carbon. Sorry, Nick.
Yeah, no, I was just gonna say before we hop over to carbon, I was gonna make an egg joke about the rate on the depots, comparing aluminum to egg prices or egg markets, because we're all stocked out in Chicago on eggs. But I guess for our audiences, whether it's a salesperson or whether it's an end consumer of aluminum, Jeff, notice. Are you concerned about any actual outages, stockouts of supply, or is it more just a function of you'll be able to get it? It's just going to be more expensive if tariffs go into place, I guess, the caveat being.
Yeah, I think that, in my opinion, that in the short term will be okay to some degree. But as this persists and as if it lasts over a period of time, it could create some challenges on the availability side of the equation. Obviously, we're seeing it firsthand. What was out there in depot 2 weeks ago, the levels are not the same. And some of the items might be, in less supply, depending on what that niche item might be. But we absolutely are seeing some of that immediately when it relates to the depot side. But I think longer term it'll get interesting, because is there importers that are going to want to bring material into the U.S.? Are they going to divert it over to Europe? Do they go to other places? That could come into play. And then you have kind of a rumbling out there that there is some positivity around certain market segments where demand could be picking back up. And we touched on it during the last Cup of Joe, but if aerospace kicks in, if you see semicon, I get it, those are big ifs, but if they come into play, that could consume a lot of aluminum that's out there in the market.
Well, one question I guess would be like, because what, 70-80% comes from Canada? I mean, if this lasts a while, would it be advantageous for domestic to kind of ramp up smelting in the United States, or is that not even discussed right now?
Yeah, I think the cost to reestablish a smelter is pretty significant. So there would have to be some strong evidence that the tariff would be applied for a lengthier period of time. And then maybe you would see some of that, but there's still not that many smelters that are in the US, even if they reopen them, that would be able to offset the actual demand that is out there and the need. The other thing that's in play, and I think Nick touched on it again in the last Cup of Joe, but scrap's been tight and Jeff, you could touch on this too, but on the aluminum side, it's probably been the last year and a half where scrap's been tight. So if you're not buying pure aluminum and pulling it out of Canada as the primary, the alternative maybe would be, hey, I'll grab more scrap that's out there. But there's just not a lot to be had right now.
Got it. Yeah. Probably that make a lot of sense. Okay.
And actually, while you're mentioning scrap, Jeff, just the original list, it was rumored that scrap was going to be hit by the tariff as well. And scrap has always been exempt. So it's been something that's allowed to flow across borders because it's not going to be resold. It is what it is. It's scrap to be used to make something new. So that could have another whole impact on this.
Well, on the topic of scrap, I don't want to leave Mark Gross over hanging by his lonesome too long. Let's kick it over.
I'm just enjoying the aluminum talk.
You're writing down notes, right, Mark, on aluminum?
Absolutely.
Literally, I would say the fireworks feel like they've been a little greater on the aluminum side, but certainly seeing some movement over the last 2 months within carbon, both tariff related and I would actually argue non-tariff related. But Jeff, Mark Gross, you want to give us a little bit of an overview of what you're seeing?
Yeah, so I mean, February is supposed to be one of the shortest month on the calendar, but it's been, with everything that's going on in the carbon market in just the last couple of weeks, it's been a full month already. I mean, we've seen, a flurry of mill increase announcements, and it's not just isolated to the flat roll guys. I mean, we've seen plate, we've seen tube mills, we've seen, MBQ producers. It's been across the board in terms of import announcements that have hit the market. So yeah, I mean, here in the near term, prices are definitely going up. And Nick, to your point, we kind of already saw that a little bit before the tariffs were really announced. So yeah, I mean, in terms of supply side, we're definitely seeing lead times start to push out, and that's again across the board, across all products. In terms of tightness, I don't think we're necessarily there yet, but I think the overall message is you're definitely gonna pay more for your steel, and you're going to probably have to wait a little longer as well, with everything that's going on. Back to the pricing front, we've seen Nucor announce their CSP. I think for 4 consecutive weeks now, they've passed along increases. The biggest one happened this week with a $30 a ton increase that they put forward, and this was coming off of like 10, 11 weeks of stability that we saw prior to these increases hitting the market. So yeah, we're definitely on an upward trajectory and on all fronts in the carbon space.
Yeah, so some of that does seem to be tariff related, but some of it also seemed to have started even prior to those tariff announcements, where we actually started to see scrap prices move up from the high 300s into the low 400s. And I think over the last 2 months, we've seen scrap prices rise by about, I think it's $60 or $70, depending on the region, per metric ton.
Yeah, mill input costs. Yeah, it's a great point. They're going up. Scrap again, after being stable for a long period of time, started to show some increases, and iron ore as well. So yeah, input costs going up, and that typically is a main driver for prices to increase for sure.
You mentioned on last cup of Joe that zinc would be affected as well, right? And that would really hit the coated market too.
It could. It's possible. I think there's a lot to still have to play out. I think it mainly affects kind of the northern geography, of the mills. But yeah, I mean, if that were to transpire, yeah, galvanized coating weights could see a pretty significant increase as well.
You mentioned the CSPs, and I've long had this question for you. I think I ask you all the time, right? About like, okay, what's the current price of the CRU as compared to these CSPs, and is it in a situation now where, I guess what I'm asking is it advantageous for the buyer to be looking at the CSPs as opposed to the open market, if that makes sense?
It's a loaded question, right? I mean, so this CSP, I think we're coming up on a year now, or close to a year. I think that we've seen it, and it's kind of Nucor's foray into published pricing, get a kind of a peek behind the curtain, I guess, so to speak. So yeah, I mean, it's that there's no real right or wrong answer to that. I mean, right now there's a pretty good delta, between the two. I think, $50-$60 a ton, somewhere around that range between, the standard index and Nucor's, CSP. So, I mean, one would think the index pricing is probably going to continue to go up in definitely in the near term. So, not sure I answered your question, Mike, but we're in, I wouldn't say uncharted territory, but it's somewhat of a new phenomenon, I guess.
Yeah, and the index being 50 to 60.
Mark often finds himself talking to the steel mill, so maybe he has to answer that question a little more delicate. But from my outsider's perspective, because I don't know the mills as well, it seems like the CSP is actually kind of leading the charge now, where the CSP is actually leading the CRU. CRU it's obviously a lagging index, but it's also at a fairly large discount per the latest publications. And just to give perspective around that, I mean, we're seeing like CSPs at 820. Mark, CRU hot rolled was
750-ish.
750-ish. I think it was 756 maybe. Yep. And then at the same time, right now, as we're sitting here today, we're seeing hot roll coil futures trading like $910 a ton. So there's just this massive spread between where some of the lagging indices are and where the futures market is kind of saying we may be going to. And we could land anywhere in the middle. We could go beyond it. It all kind of depends on the details of what these tariffs ultimately amount to.
But think about where we were like a year ago today with hot rolled coil prices. I mean, they were $1,000 a ton, that we started last year, and look at what transpired last year. So yeah, to your point, hang on for the ride, I guess.
For the Canadian steel mills, and maybe Jeff can opine on this as well, is it your anticipation that they turn internal and keep all of their production domestic within Canada, or is that something where it still is going to flow into the best market or the higher price market of the United States?
Mark, do you want that or do?
I'm going to let the resident Canadian, take a stab at that.
You know what? The material will always flow to the best price that they can get for it. And if that means that it's going to Europe in the future instead, it'll go there. They have access on the water. Navigation is going to open up in another month and a half here, so they'll be able to ship from Hamilton. I really do believe that the world takes care of itself as far as finding out where material can go. I mean, it is a global economy, and even though these hiccups kind of pop up now and then, they're more speed bumps, and things do settle out in the long run.
Sure.
Jeff, if Canada does become a state, will it be split into 4 separate states, or will it be one consistent state?
You know what? If it does, I guess I'll be able to take the 5th on that, right?
It's a lot of House of Representative seats right in Canada. That'd probably be the biggest, right?
Wow.
Well, that's I guess to lead to, those watching, it's probably just like we've been saying, wait and see. But like as a carbon buyer, as a aluminum buyer, how do you plan for this? I guess what's the way forward? Just kind of wait and see what happens next.
Yeah, I mean, you hate to say just a wait and see approach, but I mean, it's definitely tough waters, to navigate on. The best thing the message for our customers, stay close in contact with your sales reps. Make sure you're in tune there. I personally keep an eye on lead times. That's the good barometer of where things are headed for my particular product. But yeah, I mean, please stay close with your salespeople to figure out, what's going on in the market.
I would echo what Mark says on the steel side. I'd say the same on the aluminum side. I'm telling our buyers internally we're kind of keeping the reins close. Tomorrow might give us a different story than what we're seeing today. So we're just trying to stay close to all of the changes that are happening in the current market.
Yeah,
and sorry, go ahead. I was just going to say, and on the international front, we know who the players are in the markets, and when one door opens or closes, another one does the opposite. So we'll react accordingly to that. I think what caught us all a little bit by surprise was the broad brush approach to this one, where everyone at the same time is impacted. Although I will say, Nick, you've probably read things too. It sounds like Australia and Japan are trying to come at this from a trade deficit standpoint and saying, hey, let's play that card and see where this goes, because something will get negotiated somewhere, somehow. The question is when and how much.
I tend to agree with you there. And I mean, you already have like I think it's the premier, or I don't know technically what his title will be, but Modi from India, he was sitting in DC last week, and I know they've made some negotiations about liquefied natural gas purchases, and I think even some fighter jets. So those are the types of things I think we're probably going to see, is kind of a tit for tat. Hey, we'll buy this from you if you take this down. But from a pricing and risk management standpoint, as it relates to our customer business, I mean, with premiums, Midwest premiums are pricing right around 40 cents. The hot roll coil is pricing up in the low 900s right now. I mean, we can offer fixed pricing to our customers, and we are quoting a lot of business. We're doing a little bit, but I want to make sure I drive home and emphasize the idea that we don't know whether or not 40 cents and $900 are going to be good numbers or bad numbers. But what we do know is that there are numbers that we can offer. If exclusions and exemptions come through, these things can unwind in a somewhat rapid fashion. So we just want to make sure we caveat that on that side of things.
And we'd be remiss if we didn't mention stainless. We didn't have somebody on here representing stainless, right? But I mean, it applies to stainless as well. There's these 25%. And what could be said about because we get most of, I could be wrong, most of our stainless, meaning the United States, is imported. Is that correct? Or do we produce?
I would say the opposite.
I would say the opposite as well.
Okay.
Yeah, I think it's primarily a domestic play, and that's That's probably
Got
why
it.
we're not having as many conversations around stainless as we are around carbon and aluminum.
That makes sense. Okay.
Yeah,
Yes.
I think there are a couple factors that I'd touch on really quickly on the stainless side, which is one, there's a reason why we didn't highlight it as much today is because the market is being impacted much less. It's already kind of an isolated market with really two primary players here within North America, really. There could be issues with Mexinox, which is a stainless supplier down in Mexico. But don't expect it to have massive impacts on supply chains. What I would say on the pricing side of things, though, is so as it relates to stainless steel surcharges, which is going to be driven by things like nickel prices, scrap prices, molybdenum. That side of the market seems like it's much less impacted. Similar to the LME aluminum ingot being pretty flat over the last couple weeks, LME nickel has been doing much the same. It's been very, very flat, right around $7 a pound. On the base pricing for stainless, if you recall back, Mike, maybe, I don't know, was it almost a year ago we talked to Lyons?
Chris Lyons. Yep.
Yeah, Chris Lyons.
Yep.
From that, he had noted the fact that capacity utilization of stainless was pretty low. I don't know if he put a specific number on it, but he did allude to the idea that it was pretty low at the time. I think that low capacity utilization is going to give them a little bit of a buffer zone that if in fact more supply chains do come domestic, they're going to be able to withstand that. So I think it's just a slightly looser market. It might tighten up a bit and maybe see base prices rise a little, but it seems like it's going to be much more muted by comparison to carbon and aluminum.
Yeah, that makes sense. Okay. Guys, what haven't we covered? What else do we need to know? I think we covered a lot.
As it relates to the macroeconomic environment, it is worth noting that, if these tariffs do in fact go in place, I think it's tough to argue that they're not inflationary, at least for the metals and manufacturing environment. So we touched on in the last couple of Joe, the idea that inflation has become a little more sticky, a little more entrenched. And the likelihood of more and more rate decreases coming this year is dwindling, and so I think that's a theme that we're seeing playing out. If you remember, it wasn't one of my 5 predictions that inflation was going to be stickier than we hoped, but these tariffs I think just exacerbate that if they go into effect.
Yeah. Yes. Everybody, thanks for joining today. Stay close to your Ryerson rep. Talk about because this is a very fluid market, and we as much as this story changes, Nick and I will. We'll jump on and do an episode to keep you updated. And until next time, thanks, Mark, Jeff, Nick, of course, and hope to be in interesting times, right?
Thank you.
Mike.
Thank you.
Stay warm.
Thank you.
You too.